Welcome to your professional end-of-day market briefing. I'm absolutely thrilled to bring you the definitive, top-down data straight from the terminal for July 31st, 2026. Whether you're actively managing a heavy portfolio or just calibrating your radar for tomorrow's open, we're going to cut right through the noise and deliver exactly what you need to know. So let's just dive right in.
We're jumping straight into the action with a really constructive day on the street. The Nifty 50 secured its third straight session of gains, closing up 0.27% at exactly 24,383.60. Now, what makes this resilience so impressive is that the market absorbed all this upward momentum right in the middle of the absolute heaviest earnings day of the season. We had over 100 companies reporting today. Despite all that, market breadth remained highly constructive and the India VIX stayed beautifully subdued.
And the Sensex totally mirrored that bullish vibe, rising 0.21% to close at 78,094.64. If you were watching the take today, you saw some incredibly clear leadership driving those gains. Specifically, it was the financial services and auto sectors doing all the heavy lifting. On the flip side, though, information technology and FMCG names proved to be the major drags. We saw giants like ITC actually dipping about 1.4% post-results.
All right, moving into our first section, macro catalysts in focus. Let's see what's actually moving the needle.
We've got to step back from the index levels for a second and unpack the overarching macro forces moving the big money today. Because it's never just about the closing bell, right? It's about the undercurrents that set up the broader trend. And the crucial point here, our biggest near-term swing factor is the looming August 1st U.S. reciprocal tariff checkpoint. Under the India-U.S. trade framework, we are staring down a headline 18% reciprocal rate. Remember, this comes right after that earlier deal that removed the additional Russia oil levy. This fast-approaching date leaves IT and pharma highly exposed heading into the weekend. You will absolutely want to confirm the final status of this tariff before deploying any fresh capital in those sectors.
Now, looking globally, the cues were actually pretty supportive. Asian and U.S. futures were firm to mixed, which really underpinned that risk-on tone right at the open. On top of that, Brent crude eased a bit on the day. That softer oil provides a really welcome, mild tailwind for OMC marketing margins. However, the rupee remains soft, mostly pressured by a firm dollar and year-to-date foreign portfolio investor outflows. Now, that soft currency is structurally supportive for our IT and pharma exporters, but it inherently acts as a major drag on our import-heavy auto manufacturers.
Which brings us to Section 2, Top Movers and the Massive Q1 Earnings Deluge.
Look, today was the absolute peak of Q1 earnings. With a crazy deluge of over 100 companies dropping their numbers, let's look at today's terminal battleground to see the resulting market action. Bajaj Finance and Hyundai captured some massive wins today, right alongside Bajaj Finserv and TORNTPHARMA. Meanwhile, laggards like Mankind Pharma, APLAPOLLO, and SWIGGY found themselves firmly stuck in the red.
I mean, just look at the sheer dominance of Bajaj Finance today. They were the single biggest index contributor of the entire session, surging 8.3% and hitting a 52-week high. And honestly, the numbers completely justify the move. They posted a massive 29% jump in profit after tax to roughly 5,436 crore rupees, adding a 24% rise in net interest income and gross NPAs dropping all the way down to 0.96%. It's really no surprise that brokerages are aggressively jacking up their targets here.
Then there's Hyundai. This is a literal masterclass in forward-looking markets. The stock rallied 8.1% today, but certainly not because of its Q1. Profits actually fell 34% due to supplier fire disruptions and some weak exports. But you know what? The street completely looked past that. Why? Because management boldly reiterated their incredibly strong FY27 guidance, projecting 8 to 10% volume growth and robust 11 to 14% EBITDA margins. The guidance, not the quarter, drove this incredibly powerful rally.
We also saw some really incredible moves elsewhere. TORNTPHARMA jumped 5.2% on a phenomenal 55% revenue spike. That was heavily aided by the JB merger and strong leadership in both India and Brazil, ultimately posting a super healthy 33.8% EBITDA margin. And Ashok Leyland caught a really solid 5.1% bid. While their Q1 PAT of 594 crore was basically in line, the stock is aggressively riding commercial vehicle cycle optimism and just general auto tailwinds.
On the flip side, we have Mankind Pharma serving up a textbook cautionary tale for earnings season. The stock suffered a classic 4.1% sell the news drop, which is crazy because their quarter was actually great. PAT jumped 29.6% and margins expanded by 250 basis points. But the stock had already run up to its 52-week high right before the print. When absolutely everything is priced in for perfection, even a stellar quarter can spark a pullback.
All right, Section 3, the market scuttlebutt, unverified whispers.
Because look, data is king, absolutely. But to have a real edge, you have got to listen to the chatter. Now, we always separate confirmed facts from rumors on this explainer, but ignoring the chatter entirely? That's a rookie mistake. So what exactly are the big money players whispering about behind the scenes right now?
First up, Vedanta. There's this recurring chatter buzzing across the dealer desks that the promoter, Twin Star, might drop a holdco deleveraging block trade straight into this current market strength. We'd rate the probability here as medium. It's highly consistent with their stated deleveraging goals, even though there's no official fresh filing yet. If his block trade actually hits the tape, you can probably expect a 3 to 5% pullback just on the supply shock alone.
And speaking of sentiment shifts, over on retail forums like Indian Street Bets, traders are heavily speculating about a potential SWIGGY equity raise, or a QIP. SWIGGY just reported another loss quarter to the tune of 791 crores, and the whisper is that they desperately need to fund Instamart's aggressive quick commerce cash burn. We rate this a low to medium probability, but if it proves true, those dilution fears could easily trigger a 4 to 7% drop. It definitely justifies a short lean if you're actively watching the stock.
Okay, Section 4. What to watch tomorrow, your playbook.
The closing bell might have rung on today's action, but as any professional knows, the work never actually stops. Let's look at the derivatives data for tomorrow's open. Over at the options desk, Nifty Max Pain sits exactly at 24,350 for the upcoming August 4th weekly expiry. The highest put open interest is down to 24,000, and the highest call open interest is up at 24,600. Which cleanly frames your near-term support and resistance bands. For Bank Nifty, you'll want to align your strikes to its max pain magnet, which currently sits right at 57,500.
Looking ahead at pure event risks over the next 48 hours, you definitely need to align your radar for some major earnings. Tomorrow, August 1st, we've got DIVISLAB and MUTHOOTFIN dropping their numbers. And as we head into the weekend and early next week, keep a really close watch on CDSL on August 3rd and MCX on August 4th. So, what's the actionable idea for tomorrow? We're looking at a long position on Sinocoms. This is fundamentally driven by their compounding EV content and export mix. Battery electric vehicles are hitting a record share of auto sales right now, and their order book is remarkably firm. The main catalysts here are their BEV ramp-up and just continuous monthly order flow news. However, you must carefully manage your risk. The valuation is undoubtedly rich, and they are pretty exposed to single large customer swings.
And that is going to wrap up our terminal breakdown for today. With that massive 18% U.S. tariff deadline looming tomorrow and earnings season firing on all cylinders, I have to ask, are you positioned for a breakout or are you bracing for a supply shock pullback? Think about that before you model your next trade. Before you go, make sure you hit that subscribe button and definitively press the bell icon so you literally never miss a briefing. And just a quick reminder, this explainer is strictly personal research for educational purposes, not investment advice. Always do your own homework before hitting buy or sell. Have a great evening, and I will see you at the opening bell.